While the global alcohol stocks have been facing challenges for the last 1 year, Indian alcohol companies are acting just the opposite. They are rising. Take the stock of Tilak Nagar Industries, manufacturer of the largest selling brandy in India, Mansion House Brandy, which has risen by 40% in the last 1 year and by over 1,950% in the last 5 years. Another alcohol stock, Radico Khaitan, popular for its vodka magic moments, has risen by over 90% in the last 1 year and over 600% in the last 5 years. United Spirits, India's largest alcohol company, has grown by 12% in the last 1 year and has doubled investors' wealth over the last 5 years. No doubt. Investors have been guzzling the alcohol stocks. Hello and welcome to our channel 5 Minute Finance by ET Money, where we discuss personal finance and investing. This quick video is going to give you insights on why the Indian alcohol stocks are rising, how is this sector performing in the Indian market, and how the largest 5 stocks are doing. So let's begin with understanding the alcohol industry in our country and the growth prospects. India is now the fastest growing spirits market in the world. Going by news reports, it has outpaced the combined spirits consumption of major European players like UK, Spain and France. The annual sales of alcohol companies in India has jumped from 228 million cases in financial year 2011 to 412 millions in financial year 24. Factors like urbanization, a younger population and rising middle class power are driving this boom. As per a report by Infometrics Rating, a SEBI-registered credit rating agency, the domestic revenue in the alcohol beverage industry in India is amounted to $50.3 billion in financial year 2024. And in the next 10 years, it is projected to progress at a healthy 7% CAGR to reach revenue of $112 billion. In fact, top investors like Zerodha's Nikhil Kamath are betting big on liquor companies. The liquor industry in our country is divided into 4 categories. Let's look at them quickly. First, Indian-made foreign liquor, IMFL. These are domestically produced liquor that meets the standards and specifications of international brands. Here we have listed players like United Spirits and Radico Khaitan. In financial year 2022-23, whiskey remained the largest segment with an expected sales volume of 243 million cases, contributing to 63% of industry sales. No doubt, India is the largest whiskey market in the world, out-drinking the major economies. Second category, IMIL or Indian-made Indian liquor, is locally produced alcohol crafted to suit regional tastes and preferences. Like Fenny of Goa, toddy is largely consumed in southern states. In this category, there are popular players like Tilak Nagar Industries, IFB Agro and Global Spirits. One of the key concerns of this segment is there are many unregulated and unlicensed players operating locally. The third category is beer. Here we have United Breweries. And fourth is wine, where we have Sula Vineyards, a major domestic producer of wine in India. Now, as you know the categories, if you are looking at investing in alcohol stocks, you should first decide which category you want to invest in depending on its growth potential. Well, you must know that each category has a different growth rate, so selecting the category should be a starting point. Now let's look at the 5 largest alcohol stocks in our country and check how they have fared. But before we move further, you should know that these stocks are not our recommendations. In no way we are asking you to invest in them. The intent is to give you some idea about the alcohol sector and the largest companies and how they are performing in our country. You may use it for your research purposes. Coming back, so we have broadly analyzed these stocks on 5 parameters. Revenue growth over the last 5 years to assess how the companies have performed. EBITDA margin to understand how well a company is able to generate revenue and manage its operating costs. Debt position of each company. ROCE to evaluate how well a company uses its capital to generate profits. And finally, the valuations to see whether the stocks are fairly priced or expensive to invest at this time. Let's begin with the top line growth of these stocks. We can see that Tilak Nagar Industries and Radico Khaitan have registered strong sales growth in the last 5 years. These 2 growing companies have benefited by expanding their product portfolios and premiumizing their products. For instance, Radico Khaitan has recently launched Rampur Signature Reserve Single Malt Whisky, an ultra luxury whisky with limited release of 400 bottles priced at Rs 5 lakh per bottle. Next, we looked at EBITDA margin, which indicates the shape and health of a company at an operational level. A higher EBITDA margin indicates that a company has lower operating expenses and can make more profits relative to its revenue. Overall, we can see that United Spirits, Radico Khaitan and Tilak Nagar Industries have better operating margins. Apart from comparing the EBITDA margin, you also need to check whether the company has improved its operational efficiency over the years or not. So for Tilak Nagar Industries, the EBITDA margin has improved a lot over the past 5 years, from negative 7.9% to positive 13.3%. For Radico Khaitan, EBITDA margin has reduced from 15.2% in financial year 2020 to 12.3% in financial year 2024. The drop requires research to figure out the reason before you decide to invest in this company. Next, let's look at the debt position of these companies. Here we can see, except Allied Blenders, the other 4 companies have negligible debt in their book, which is a positive sign. company uses two types of capital, equity from shareholders and debt from external financing. Return on capital employed measures how efficiently the company is using both equity and debt to generate returns. So higher the ROCE, the better it is. It's more comprehensive than return on equity, which only looks at returns on shareholders' equity. The return on capital for all the 5 companies is on your screen. If we compare them, United Spirits and Tilak Nagar Industries have higher ROCE, means they utilize the capital in a more efficient way to generate profits. For a closer look, you must compare current ROCE with the historical ROCE of the same company for say 5 years or even longer. This will help you gauge if the ROCE has been improving for the company over the years or not. So by now, you must have got some insights on how the largest alcohol companies are doing. Let's talk about one more important metric, valuations. Stock valuation means checking the worth of those stocks. So valuation metrics. Let's talk about the most common one here. Price to earnings tells us if a stock is undervalued, overvalued or fairly priced. This will further help investor to decide whether to buy, hold or sell a stock. For this, we checked 5-year median PE of all the stocks and compared it with the current PE ratio of that stock. The data is on your screen. If the stock's current PE is higher than the 5-year median PE, it means the stock is overpriced and vice versa. So except for Radico Khaitan, the other alcohol stocks listed in the table are trading close to their 5-year median PE. Looking at this data, we can say the stocks are trading at reasonable valuations. The PE ratio of Allied Blenders is not applicable because the company's earnings per share is close to 0, which is a key variable in the calculation of PE ratio. So this was the basic idea for a new or beginner level investors about the alcohol industry and the largest liquor companies in our country. There are many more ratios and numbers to be looked at for a deeper analysis. Don't make your investing decisions basis just this information. And it's a wrap. Please don't forget to like, share and subscribe, and we'll see you with another insightful video soon.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.